Good Tuesday afternoon to you. Welcome to the Jon Sanchez Show on Newstalk 780 KOH. It's a pleasure to be with you and a pleasure to be with my co-hosts. Around the horn we shall go. Dwight Millard, of course, of Highlands Mortgage. How are you, Mark?
I'm doing fantastic, John. How are you?
Good. Glad you were able to wrap up that call before the show started.
Multitasking.
Quickly, yeah.
That's it. They always call it the best time. Corey Edgevich, Realty Big C, how are you?
I'm doing good.
Good, man.
Always.
Good. Glad to hear it. Corey's mobile today. This is a great thing about technology. Broadcasting from the front seat of his truck, out hard working. I love it, man. I love it. And you were saying, you and I were chatting that you're looking at getting the mobile Starlink in your trucks. I think for what you do, man, I could not recommend it more. It is amazing.
Yeah, and I think like we were talking about the little one, and then they have little magnet case you can put on your truck. You can take it camping, do whatever, and it's not. Exactly. They're not expensive at all.
No, they're not. They're not one bit. No, we have multiple Starlinks in different locations and things, and yeah, they're it's amazing technology. Have you guys seen the Starlink rockets when they fly off of launch out of Vandenberg? Yeah, it's.
Well, I haven't seen them launch. I've seen them fly over my house, and you're going, "What? Oh, we're being attacked by aliens for sure."
They're coming from Vandenberg, though.
Yeah,
pretty amazing, no doubt about it.
You know, it's funny, John, how far we've come because Corey, he's the one that kept me off BlackBerry. We'd go golfing, and his BlackBerry go off the whole time. I go, I'm never going to get one of those. And here he is. Now he's going to Starlink. There you go, Corey.
I think you and I should get the credit for that, Dwight. We're the one that's converted this man to technology, right?
No, it's not me. It's not me. It's you. It's you and somebody else because it's not me.
Yeah, we're all Corey's our project when it comes to technology. We're just trying to get him up to the current times.
I just remember the days when I would walk around and Dwight would be on his phone on the speaker yelling at me. I'm like, Dwight, you need to take it off speaker. He's like, my microphone doesn't work. I can only talk on speaker. Like we'd be at lunch, right? I'm like, you got to get that thing off the speaker.
He's exaggerating these stories. He says I've thrown files. He's never seen me throw a file.
I did too. You almost killed me with the telephone once.
It's almost like you've never been pulled over and given a ticket by NHP for eating a cheeseburger.
That's right. That's right.
Mm-hmm.
But I've grown up. No, we don't do that anymore. We do not do that anymore.
You've grown up 60 years later.
61.
Yes, indeed. We've all improved. That's for sure. Oh, my goodness. Alrighty, boys. Well, let me tell you what we have lined up, everybody. We are, again, one of my favorite times that we get to do this each and every month, and that's where we go through the local real estate data. We're going to tell you, how long it's taken to sell a house, our median price, the amount of inventory that's out there. But most importantly, besides the data, the absolute, if you've never heard one of these reports, the most valuable information is not what's on the report. It's what these two gentlemen are able to share, right? Sometimes what they're seeing in the field, as we like to call it, is different than what the report is showing. And most importantly, because they are in the trenches each and every day, many times what I've noticed over the years is you guys spot trends, whether it's a good trend or a bad trend, sometimes before the data. Because again, this is going to be October's data. I mean, here we are, November the 18th. In the stock market world, that's an eternity. Real estate world, things can change in a 2 or 3 week time period. But overall, I think it's always just a great report for us to kind of get a good gauge, good barometer as to what's going on with our local real estate market. So going to be good stuff. Thank you, Mr. Edge, for providing that.
Mm-hmm.
All right. Well, with that said, let me get right into the stock market side, guys, to save some time because this was not good stuff today. It started off as a tough pre-market session. We were down about 300 or so when I started my updates at 523, and it just continued to get worse throughout the day. Worst level we were down, actually we hit it a couple times, down over 600 on the Dow Jones Industrial Average. So let me boil it down as to what happened. Well, first I'm going to tell you, I usually save this, but I'm going to tell you how we finished up. Finished up with a loss of 499 on the Dow, 1.07%. To a close of 46,091. Nasdaq lost 275, 1.21%. S&P down 55 or 0.83%. So it was a combination of a number of different things that happened. It started off early this morning. I mentioned this on the show yesterday along with Jason. Highly anticipated earnings report from Home Depot. That report came out early this morning, the pre-market session. It was not a good report. They missed on the earnings per share estimate. They lowered their fiscal 26 earnings guidance. That weighed on not only the stock, but also the kind of the consumer cyclical sector of the market. And then, of course, a reminder that Home Depot is a big stock. It's a $336 stock, and it's a Dow component. So that weighed on things. That was one of the culprits that brought us down in the pre-market session and continued throughout the day. The stock finished down $21.55, about a 6.02% loss to 336.48. So that was factor number one. Factor number two to the weakness, Amazon. Stock finished down $10.32, 4.43% loss to 222.55. They got a downgrade from a Rothschilds and Company. They downgraded the stock from a buy rating to a neutral. That is a Dow component. Then we move over to the world of NVIDIA. After the close tomorrow, we're all going to be reeling whether good news, either we're going to be smiling or we're going to be crying after the company releases their earnings numbers right after the close. Ahead of that, though, stock, by the way, is down about 9% over the last, the last 3 days, last 2 days, this week to date. Keep thinking it's Wednesday. Today it was down $5.23, 2.8% loss to 181.37. Peter Thiel, we heard yesterday that his fund liquidated all shares of NVIDIA. So that got everybody thinking, like, what does he know that the rest of the world doesn't? So that put pressure on that stock, another Dow component. Falling in sympathy today was Advanced Micro Devices in the semiconductor space, 4.25% loss, down $10.23 to 230.29. Micron, $13.45 loss, down 5.56% to 228.50. So once again, this whole AI trade, valuations, et cetera, that I keep talking about till I'm blue in the face each and every day, I know you're tired of hearing about it. That is what's affecting these stocks. Again, this could all change tomorrow. If NVIDIA comes out and reports numbers that are better than what Wall Street's anticipated, then all this concern about valuations, et cetera, could go by the wayside. So that's why this is a very important report. Let's see, Loop Capital today, they upgraded Google, so that was a positive in the tech sector. Stock just fell to 64 cents, 284.96. Let's see, United Health was another pressure of the Dow, down $6.94, 313.58. Dwight, let's jump right over to the bond market side of things today. The CME FedWatch tool, moved in your favor a little bit, jumped up to an odd of 51.1% probability of a 0.25% cut in December. That is an increase from 42.4% yesterday. So look at that. See, Dwight, you didn't even have to do anything, just have the stock market fall and the odds of a 0.25% cut go up.
Yeah. And what was it? Is it Paulson as a Fed member, or am I getting it right, that said in favor of a rate cut in December? Started that?
Yeah, I believe it was
Paulson. Yeah. So your 30-year fixed rate, believe it or not, unchanged, John, 6.38. We're just really sitting in this 6.335 range for ever since the Fed's announcement, last month. So
right.
I don't see a lot of movement until either that percentage goes up or goes down.
Mm-hmm.
Right. It's a tough market out there, and it's really rough. And when we get into the report, we can get more in the trenches with it, but the borrower is very, very fatigued. More than I've ever seen. That's
what I was just going to ask you.
Yeah. The affordability is just killing them.
Let's talk about this.
Yeah.
What, again, as I said, this is the best part of when we get into the real estate report. What's your gauge? What's your barometer, Dwight, of the consumer right now? And before you answer, I just want to remind everybody, report after report that we're receiving, whether it's auto delinquencies rising, credit card delinquencies rising, foreclosures rising, the consumer is strapped. They're tapped, they're strapped, they're hurting right now, right? For various reasons. But Dwight, they sit down in front of you or over a video call. Talk to me about what you're seeing, hearing from these people right now.
Well, I think on the one word that comes out is there's fear. They're afraid that either their house won't sell. Their employment cut back. Something's going to it's amazing how they're now creating things that potentially could happen that is affecting their decisions now. And it's hard to watch because, to Corey's point, last week, I met with one the other day, he got his health insurance dropped. And so he's scrambling how can you go effectively look for a house to buy if now you don't know what
his home insurance?
No, his health insurance. He was self-employed, just like Corey. His health insurance got canceled.
Oh, I thought you said Corey got it.
Like Corey was talking about last week. Remember how Corey was talking about last that. And so now, how do you go buy a house when you're uncertainty of your health insurance?
Right.
And so I got to pause it. And that's it. Fear is just everywhere right now. And we are forever the optimists on this show and always have been, but there's a lot of fear going on right now, and it's just hard
What do
to
you
overcome.
what's your advice to these people? Do you just say, you know what, I think it's best that you hold off for a little bit, or how do you counsel them? What's your advice to the audience and to your clients?
Well, I think it depends really on the situation. If they really truly need to move, and there's Corey has said it before. He has talked borrowers or buyers into waiting, and yeah, I mean, if they don't need to do it right now, there's no reason to do it right now. I mean, if you don't have to move, and don't try to cram this square peg in a round hole, and that's what they're trying to do. It's really unfortunate, John, because my heart breaks for some of these people because it's a story inside of a story. And, I'm sure Corey hears them. And the biggest frustration right now is selling an existing house just to move. People across the board are having a hard time selling houses. Maybe it's a price thing, like Corey always says, but,
It's always price, right, Corey?
Absolutely. Yep.
Price. All right, Corey, when we come back from the break, I want to ask the same question to you. Let's get your gauge of how the consumer's doing at this point and see if it coincides with Dwight. I bet it probably will. All right, let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Corey Edge of Edge Realty to Dwight Millard of Highlands Mortgage. Once again, we finished down 499 on the Dow, lost 275 on the NASDAQ, a decline of 55 on the S&P 500. On the commodity front, we gained about 78 cents on oil, $60.68 a barrel, down $8.10 on gold, $4,064.50 per ounce. 1 basis point loss on the 10-year at a yield close of 4.12. And as Dwight said, the 30-year mortgage, 6.38, right, Dwight? Big old goose egg, unchanged for the day. All right, so we're going to get into our local real estate report. We'll tell you about, again, how long it's taken to sell a house, the median price, all the things you need to know to make an informed real estate decision. But as I always say, the best part of this monthly segment we do on the local real estate market is what these two gentlemen share with us and are able to talk to us about what they see going on in their various businesses. Dwight is a lender. Corey is a real estate broker. Dwight told us the consumer's hurting. Corey, let's go to the same question to you. What's your gauge of what the consumer, how they're doing at this point?
They're stressed. I totally agree with Dwight. I don't know if it's a panic or a low level fear, but yeah, people are stressed out, because of cost of living, even though they say inflation's coming down, which technically I guess it is. They're still stacked on everything that's happened over the last 5 years, whatever you want to call it. The prices, to Dwight's point, I don't think people have a hard time selling a house. They have a hard time selling a house at the price they need to get to clear the debt. You can always sell a house, but in order to get out of it, that stresses them out. And people are worried about losing their jobs. I mean, we were talking about it on the break. You hear about it. Like these layoffs are becoming a big thing. There was I may get this wrong, but I think the QRI report this morning mentioned that the amount of layoffs coming per that report is the biggest ever based on the history of that report. And so even if you feel stable in your job, if you have one of those entry-level jobs, you're probably feeling a little panic right now.
Well, I'm going to correct you. I disagree with you on just one aspect, which is it's not just entry-level jobs anymore, Corey. It's any, as we were discussing during the break. I mean, if you don't mind, Corey, your son's going off to college next year. And like you said, you and your wife are going to sit down and say, is this really what you want to do versus going into some type of a trade or trade school or, Dwight, you said go into medical, right? Some of your kids are into the medical side, which all of those are great pieces of advice. But Corey, to your point, we see, I mean, let's just go back to Amazon a few weeks ago. 14,000 employees were let go that were in corporate finance. 14,000. These aren't entry-level positions, most likely, right? And so I think what I agree 100% is, yes, absolutely. It's very tough if you're an entry-level employee. And we're all talking, of course, because of AI. But I think anybody that sits behind a desk, Dwight and I are at a big risk. Corey, you're not, because you still physically, at least at the time being, need to go out and physically show a house and things. But for those of us that sit behind a desk and deal with, paperwork and things like that, those are the professions that are at a risk. But, I want to remind everybody, please go back and I want you to listen to 2 podcasts. Well, I'll say the one. You should listen to our podcast every day, but go back and listen to the podcast that my brother Dennis and I did yesterday in regards to AI and how to become a solopreneur, folks. Because again, we after we finished the Jon Sanchez Show, we went over to our other studio, Podcasters of America, which is where you can find the roughly an hour-long interview Dennis and I did together. And I gave some examples of, once again, the power of AI and why it can, eliminate so many different people that literally you can start a business, as I did over the weekend. One of my businesses I had to create a new marketing plan for, and I was done in a matter of an hour. And the most remarkable marketing plan I have ever seen came out of AI, out of Chat GPT, and I'm going to implement it. And so you look at this and you go, all these people that are losing their jobs because of AI. But one thing that we have to remind ourselves on is you can either, and we say this all the time on Mondays when Dennis joins us, and that is you can either embrace AI or you can try to fight it. And let me tell you, it's like trying to fight the stock market or the Fed. An old saying I was taught as a very young broker: never fight the tape. Don't ever try to fight AI, because it is going to win. And Corey, you were saying you watched an interview with the founder of Anthropic, a great 60 Minutes interview, and so on and so forth. I'd love for you to share with the audience. But he said, you're going to have to expect 10% unemployment. And I said, who's been telling you guys that? I've said that for the last couple of months. That is going to be our norm, 8 to 10% unemployment. And so folks, either you got to embrace it and get into the world of entrepreneurship, or retrench and retrain yourself to make yourself valuable. Because just look at your job. It's a really simple test, really simple. I'll call it a litmus test. And that is, look at your job and go, you know what? If I wasn't sitting here, could a computer do it? I'll give you guys a prime example. Just a prime example that just happened to me about an hour ago. My wife called our local Toyota dealership because I have a Toyota Tacoma, and to get an oil change. She comes storming into my office and she goes, "You're not going to believe this." I said, "What?" She goes, "I just called Toyota to make this appointment." She goes, "I just had a conversation with a chatbot." So they recognized her number when she called. The chatbot picks it up and goes, well, they thought it was my number because, it's kind of my account. And the chatbot goes, "Hey, John, how are you today? What can I do for you?" And she says, "We'd like to get an oil change." "No problem." "Well, I can tell this isn't John. This is Megan. So you know what, Megan, when do you want to come in for an appointment?" She said, "I went on this entire conversation like I was talking to a human being. It was friendly and knowledgeable." And as soon as she hung up, because it took her about 5 minutes to walk into my office, here comes the email confirmation, just confirming your oil change this Thursday at 9:30 in the morning. That's where it's going, guys. That's where it's going. And that's why, as much as it pains me, God knows I don't want to see anybody lose their job. But we are at a transition in our life, in mankind, unlike anything we've ever seen before. And all I can tell people is what you guys are feeling and seeing with your clients. We're different, right? Most of our clients are in or near retirement, so we're not hearing a lot of the things you guys are with people still working. But it is terrifying out there. But you've got to sit back and you've got to do some like I said, some retrenching, or join the club, and we'll show you how to become a solopreneur. Because let me tell you, that's the bright side of AI. It can get you into business in a matter of hours. It really can. I literally, guys, and I'm going to do this one of these days. I'm going to take a bunch of names. We'll build up a big list, and I'll randomly select one person off of this list. Bailey Marie, please join us real quickly as the marketing director and producer of the show. Let's see if she jumps on here. Looks like she's tied up. Anyways, I think that'd be a great idea, don't you guys? We'll take a bunch of names, get a couple hundred names. We'll draw one name out, and maybe on the air we'll create a business using AI and show you how fast it can be done. I mean, a full-blown marketing, financial, you name it, plan, everything you need to get into business. I can show you within an hour, 2 hours at the very most to do that.
Absolutely.
Wow. That'd be great.
Yeah. This is the way we got to do it. But Corey, real quick before we go to break, you said you watched this on 60 Minutes. I'm going to watch it tonight because I missed it. But this interview with Anthropic, just today they were in the news. They're now valued at $350 billion. They just got a big investment deal with Microsoft and NVIDIA. So chime in real quickly with the gentleman, the CEO, had to say.
Yeah, and if people don't know the company, it's a competitor to ChatGPT. As a matter of fact, the guy used to work there. He was one of their engineers, and he started his own, and their product is Claude. A lot of people know the name Claude. But it was fascinating to listen to the man talk about what it is, what it does, the fact he doesn't think that 10% unemployment is too far in our future. But then to listen to him talk about how this is a living thing and they don't know what it'll do on day to day. And they've had instances where it tried to blackmail an employee because they knew they were going to go to the next version, or they had a real instance where I think it was North Korea had hacked into the system and was trying to mess with it to go against other countries. It was an eye opener, not just from the jobs front, but from the front of, yeah, these things kind of can carry on a life of their own and nobody really knows where they'll go. 10% might be a happy number of unemployment based on what we know. So times are changing.
Times are changing. They really are. Alrighty, folks, we'll come back and we'll get into our local real estate data. No AI here. It's all human beings. I promise you that. But, at some point, it's going to be AI replacing all this on the radio. I just have a feeling. But no one can replace Corey and Dwight's personality. I don't see that happen. Dwight's good looks, especially. I mean, there's no AI bot out there as handsome as Dwight Millard is. Let's turn it over to Jack Saban. Speaking of handsome, he's going to give us news, traffic, and weather. Hey, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Corey Edge Realty, Dwight Millard of Highlands Mortgage. A 499 decline on the Dow, down 276 on the NASDAQ today, pulling back 55 on the S&P 500. Market valuations, Home Depot's earnings. And, guys, right back to, I should have mentioned this when I went over, again, Home Depot's performance and how it was one of the big drags of the Dow with it, losing 6.02%, down $21.55 to a close of 336.48. This ties in exactly as you guys are saying. I mean, I look at Home Depot, I don't know if you guys do, but definitely a great barometer of the health of the consumer, right? Corey, it goes into, you shared stories over the years from when during COVID and you said, yeah, I just went and paid, was it $6-8 for a 2x4 that normally costs about $3 to, it's just a great gauge, what's going on in the housing market, remodels, and just the consumer in general.
Well, and if I heard it correctly, the Home Depot call alluded to the fact that the remodel boom has slowed down, is either slowing down or has completely come to a stop, which is why their earnings were down. And I was thinking about that, thinking Americans love to remodel. I mean, it's not uncommon to remodel 3, 4, 5 times a year because they love doing it, until you get to the point where you're not sure if your income can afford another remodel. So to me, that's a consumer confidence issue.
Right. Yeah, definitely back to the consumer confidence. You and other lenders, you're kind of the nucleus of a significant remodel, right? Where they come to you and get a HELOC, that type of thing. Right. What are you seeing there? Is that business slow down at all? Still active? What's kind of the status there?
I think the inquiries I'm getting for, it's amazing, John, because these companies that offer HELOCs are getting very aggressive. I'm getting lots of lots of emails, but and the guidelines are actually changing in the favor of the consumer. But most of the inquiries now I'm getting are to consolidate debt. It has nothing to do with so it's more debt consolidation than anything. It's kind of go along with our theme right now. The consumer just is stretched, and anytime they get a break, they're going to try to unwind some of that debt.
Yep. That makes sense. All right. Well, let's see if we can go back to one of the piggy banks for a lot of people, and that is the equity in their home. How are things going? If you want to buy, if you want to sell, let's bring you up to date on the latest data from the month of October. Okay, Mr. Edge, here we go. We'll start off with our, again, the most important thing that everybody likes to know, and that is what the heck is the median price right now? So you're showing me $595, up 2.8% from September, up only 1.9% from October of last year. Oof, that's not a good number, my friend. I can't remember last time we've seen that slow growth.
Oh, but if you think about it, it's levitating, which levitation isn't too bad depending on if you're at the right level. So remember, this is Washoe County, Reno Sparks, stick-built homes, nothing new, $595. I'll tell you, John, I don't want to give away the surprise in the report, but there isn't any surprises. It's kind of a boring report, but I was pleasantly surprised to see the price stick to where it was and levitate here, given Thanksgiving's next week, if that makes sense. So, yeah, because usually we see a pretty decent drop.
So we can look at that as a positive.
That's the way I looked at it. Absolutely.
Okay. That's interesting. All right. Yeah. All right. Dwight, any comments on the median price, $595?
No, I agree 100% with Corey. I would have expected to be slightly less and rebound down the line, but yeah, I guess it's a win right now.
Okay. All right. Let's move on to our closed sales. 401 closed sales, down 2.2% month over month, down 3.1% year over year.
Again, if you're looking month over month, even year over year, these things are just kind of streamlined. We've had a little bit of ups and downs through the year, but they've all kind of stayed steady. So 401 for October, coming into the holidays and the slowdown, that's not too bad, really. I wasn't upset with it.
Okay. I have a feeling you're going to be leaning towards this optimistic side throughout the rest of this report. So I'll jump right to the question. Is this a good telltale sign that we could be in for a good spring season? If it's already, here we are in the slow coast.
I don't know, because to me, Dwight can confirm or deny, we had a bad spring. I didn't think the summer was that great at all. So now we're just holding those numbers. So does that mean you're holding good numbers or you're holding bad numbers? it's kind of stayed here. What I did, I didn't send you guys the report, but I looked this closed sales number. I went all the way back, I think, to 2015 or 16, right in there, to see where we're usually at, because we've been talking about it lately. Our average monthly sales in 17, 18, and 19 were about 700 to 800, to give you an idea of where we are now. And so post-COVID, now we're down. We're down. If you look at it that way, we only do 50% of the business we used to do prior to all this stuff, but the price is up 100%. So go figure.
So what does that tell you? I don't think you've ever shared that stat. We're only doing 50% of the amount of business. What does that tell you?
It tells me what Dwight and I know, and Richard Lace knows, and Chad over at the title company. Everybody knows that the amount of activity on transaction volume is way down, but because of this massive run up in prices, everything kind of stayed a little bit status quo, if you will. But it makes it incredibly hard for a buyer, because that buyer has less to choose from, and they got to pay double for what they do choose, and the incomes haven't stayed up. That's that same old story we've been talking about. But I just thought that was an interesting number. I'll have to send you the graph.
No, that's very interesting stat. Yeah, please.
I think what breaks the dam, John, is if you get more inventory. Corey's always said it. You get more inventory, these numbers are going to start favoring the buyer. I mean, there are areas of this country right now that are way buyer heavy right now, so it's kind of an odd. Reno's we've always talked about it.
Buyer's market is what you're saying.
It's a buyer's market. Yeah. And so Reno's always kind of had this little bit of a bubble, and it's kind of showing itself right now, because large part of the country is a buyer's market right now.
Yeah.
Heavily.
Okay.
And so it's, these are good, I think, solid numbers, to Corey's point, considering.
Well, you were saying, we need more inventory, but I want to give kudos to you, Dwight. You've been preaching this for months, which is when we talk about what are the solutions to the lack of inventory, and you saying, John, we need a portable mortgage. And sure enough, the Trump administration is now talking about somehow, some way creating a portable mortgage where, again, you could go from your current, whatever, 3.5, your low mortgage, and move that over to the new house, and so on and so forth. Very much in the infancy stage, but hey, it's a bright spot. At least they're talking about doing something.
Well, we talked about it last week, even the 50, they threw out that
better than the 50-year mortgage.
The 50-year mortgage and different things, but they're going back to the holiday now on the capital gains. They're talking about that again. If you want to sell an investment property, now they're talking about those type of things, John. So it is, at least they're talking about it.
Yeah, at least we're talking. Exactly. All right, Corey, let's squeeze in one more before we go to break. Median days to contract, 35 days, down 12.5% month over month, up 20.7% year over year. Not a real important stat, right?
No, but it is interesting that, again, in the month of October, 35 days is from the day it goes active to the day it goes pending in our MLS system. So for that to be down 12% September to October, I wouldn't have thought that. I would have thought it would go up, because that's normally what it does. So it means people are moving faster for whatever reason in October to get these houses in contract.
Okay, perfect. Maybe try to get in there before the holidays. All right, guys, we'll continue on our report of our local real estate data for the month of October. Let's wrap it up with Kristen Snow. Right now, Traffic Center, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Mr. Corey, Edge of Edge Realty, your phone number, Saul.
673-6700.
Mr. Millard. Great job, fellas. All right, we're going through our local real estate data. And once again, just to recap so far, our median price in the month of October, this is all October's data, $595,000, up 2.8% month over month, a gain of 1.9% year over year. Closed sales, 401, down 2.2% month over month, down 3.1% year over year. Median days to contract, 35 days, down 12.5% month over month, up 20.7% year over year. Not much budget on this one, Corey. List price received 98.5%, 0.3% increase month over month, down 0.1% year over year.
Yeah, that number doesn't move that much at all.
Stuck in the mud there.
Yep.
Medium sold price per square foot, $319, just a 0.2% increase month over month, up 1% year over year. I'm really surprised on this one, Corey, that we're not seeing inflation kicking in. I would have thought we'd see a bigger price increase on that one.
Well, I mean, the houses will only sell for what they'll sell for, right? Like, I'm sure people would love to have a higher number and get a higher price per square foot, but they only get what they get.
Okay. All right. A number of new listings. This is interesting. 27 new listings month over month, an increase of 5.2%, but down 9.9% year over year.
Yeah, not a crazy number. Again, closing about 400, adding about 400. This market just kind of keeps regurgitating the same numbers month after month. Unfortunately, it was the same numbers through the spring and summer, which should have been much, much higher. And so it's not, again, I'm going to sound like a broken record. That is not a bad number for October. We'll see what November does, but that's not a bad number for October.
Okay, good. Let's see. Our active inventory, 1,003 homes for sale, down 4.6% month over month, down 1.5% year over year. Boy, no one's in a big hurry, are they?
No, and that we'd have to look back at the last 2 or 3 reports, but I think that's the first time we've had a lower active inventory month over month in a while because it's been increasing. So that may have something to do with holidays. People aren't usually going to list their houses in October. It's typically a horrible time, October, November, December. So that one's not super surprising, but it does help out. That doesn't help the buyers. It does help the sellers. There's less competition.
Dwight, to Corey's point, where again you don't see a lot of people listing their homes for sale in the holidays, do you deal with a lot of home developers, the nationals and not national, but developers in general? Do you see them offering more incentives this time of year to generate those sales?
100%. Yeah, they're trying to get them, and they do it actually monthly, but then they do the big year end. We got to clear everything out. So it's a push. They're coming up with Christmas packages and New Year pack. There are all sorts of packages that throw in, dishwashers and washing machines and refrigerators and blinds, and yeah. So it's definitely a push, I think, and it's always been like that, but it seems more aggressive right now.
All right, boys, let's wrap it up with the very important number, the month's supply of inventory. 2.5 months of inventory, Corey, down 2.4% month over month, up 1.7% year over year.
Yeah, decent inventory. I mean, higher than we've had over the last couple of years. It's been steady pretty much all year, so it gives the buyers some options. The inventory coming down isn't surprising, again, going into the holidays. So, as I mentioned, not to be a downer, but the whole report's kind of boring. But
yeah,
depending on how you look at it, boring's good in this case because you didn't fall off a cliff. Nothing bad happened. I doubt anything bad's going to happen over the next couple months unless something bad happens, I guess. But I don't see it.
Right, exactly. Wait, we got about a minute left. I want to wrap up with you. You spent a lot of time back in the Austin, Dallas, etc. area of the country, and you were just saying during the break, you're now seeing brand new brick homes in the 2,000 square foot range, now below 400,000. Amazing.
The unfortunate part to that, John, is that property taxes compared to like in Northern Nevada are significantly higher. But I mean, it's just lots and lots of properties to look at, and so it's amazing what they can build them for.
And you said you're hearing again this. I haven't researched this, so I'm going to say it's quote a rumor from you, or that you're hearing that Boeing may be looking to going to Lubbock.
I'm supposed to say that. I've heard it from a couple different people, but yeah, it's just, I can't validate anything, but
yeah,
it's be one of those hot markets it makes sense kind of multiple ways, but yeah. That was just a rumor I've heard 3 times from 3 different people. So
no kidding. And you obviously see a lot of data centers going on around there too, right?
Everywhere. Massive. Yeah.
Massive centers with 20 employees, right, Corey?
Yeah. Awesome. Just what we need. A lot of robots. Corey, was that 60-minute segment on Anthropic? Was that this last Sunday? Yes.
Okay. Yeah. You should be able to find that on YouTube.
Yep.
All righty, boys. Hey, boring is good. We'll take boring, Corey. We'll take boring.
Absolutely.
No doubt about it. Great job as always, fellas. Do appreciate you. We'll do it again tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon.